Hi, welcome to another edition of CMS Forex News. My name is Fan Yang, and today is Tuesday, February 3rd, 2009. We begin in Australia with last night's central bank announcement. The RBA lowered rates by 100 basis points to a 45-year low of 3.25%, and the government announced a plan to spend $27 billion to help stimulate the economy. The lower interest rate should help save homeowners money on their mortgages, while the government plan should go towards those in need during the economic downturn and spending on infrastructure. Australia's trade surplus shrank by 40% in December as an economic slowdown in China reduced demand for commodity exports. The 590 million Australian dollar figure came in far below expectations, and November's total was revised down by nearly a third. Traders, having priced in the interest rate cut from last week, bought the Aussie today as we had a return to risk appetite. The Australian dollar-US dollar pair rallied 280 pips from its low near 0.6250. The pair managed to hold its gains in late New York trading and even broke above the 0.65 area. The Euro-Yen pair also climbed higher today, though in choppy trading, effectively cutting half of its losses from late last week. Stocks were higher in Europe by about 2%, increasing risk appetite. Also, the Bank of Japan said it will resume buying shares held by financial institutions in an attempt to improve banks' financial positions and bolster the nation's financial system. That too had a positive effect on risk sentiments. In fundamental news from the Eurozone, producer prices fell more than expected in December, declining 1.3% on the month following a 2% drop in November. That put the annual rate at 1.8% as falling oil prices continue to filter down. German retail sales disappointed forecasts, undershooting expectations of a rise in December. Instead, sales fell 0.2% on a seasonally adjusted basis, and November's figures were revised down to show a 0.1% decline. Apparently, the holiday seasons did not provide any significant boost to demand. Despite the weak Eurozone fundamentals, the euro-dollar pair posted a second day of gains, reaching 1.3035. The euro gained, or better yet, the greenback declined as the demand for its safe haven weakened for a second straight day. In addition to the measures taken by Australia and Japan, the Fed extended its emergency lending programs and foreign swap lines by 6 months. These measures are meant to relieve the strains on the financial markets. The US dollar-Canadian dollar pair, which have been sensitive to risk sentiments, fell in favor of the loonie following 3 days of gains that put the pair above the 1.25 level. Today, the short-term line of support was cracked, and the pair fell 200 pips to the 1.2310 level. That's a 38.2% retracement of the recent climb. In U.S. news, pending home sales increased a modest 6.3%, beating expectations of no growth. Deep discounts and lower mortgage rates got potential buyers off the sidelines. In a comparison of the two currencies that do best during times of risk aversion, today saw the dollar-yen pair continue its newly formed downward channel. The pair set an intraday high near the 90 level, but then fell around 130 pips to set a new low for the week near 88.60. It then recovered from that low rather quickly as the end of the new U.S. trading session saw U.S. stocks climb. The Dow Jones Index was up about 160 points to reclaim the 8,000 level. Coming up tonight, Australia released data on services, retail sales, and building approvals. The UK will reveal a measure of consumer confidence, followed by services data overnight. The Eurozone will also reveal its final version of services PMI. Tomorrow, the U.S. posts its ADP employment change and the ISM non-manufacturing index. That wraps it up for today in the Forex News. Join us here again tomorrow at cmsfx.com.